let us bring you in on.
Welcome everyone to the Elliott Wave Forecast free webinar. I'm your host Ayub bin Rajab, and I'm excited to have you all here. Let's check if the audio is working fine. Let me see the chats here. Okay, I see some comments there, of course. Hello, that's great. Hi everyone, hi Amar, hi Daniel. Okay, so thanks everyone for joining. So we took a few minutes to allow everyone to join before we kick off the presentation. That's great, thank you for the confirmation. Okay, so let's talk about a little bit about Elliott Wave forecast, as you've been hearing in the audio in the background. So we are a forecasting company. We are passionate about helping traders and investors navigate in the financial market with confidence. Elliott Wave forecast founded in 2005 by Eric Moreira. So it's been now 20 years of hard work. We've grown into one of the largest technical analysis firms in the world, providing 24-hour coverage across 78 markets, including Forex, commodities, cryptocurrencies, global indices, stocks, and ETFs. Our main approach is built on the foundation of Elliott Wave theory, enhanced by our own proprietary forecasting system, which allow us to deliver high precision market insights. Whenever you are looking for a long-term forecast or investment strategy or short-term trading setup, we are here to help you get informed decision and get the right market setups. So one of the most important key is educational. We believe that education is key to improve, which is why we offer also a variety of learning resources, including free video, articles, and paid educational service designed to help even beginner to understand market dynamics and learn how to trade effectively. So let's now move to the presentation. Before we, of course, we start, I would like you to read this disclaimer regarding the trading risks and education later. As you know, trading either crypto or Forex or stocks or futures all involve significant risk. So you need to be aware of all the risks. And most importantly, this content of the webinar will be for educational purpose only. So we shouldn't be considering that anything we are discussing here, any type of offer to sell or solicitation to buy any stock or cryptocurrency, you need to be informed that this is all for educational purpose only. So this will be the topics for today. Let's take a quick look. We'll begin by exploring the Elliott Wave theory, breaking down how markets movement follow structured wave pattern. We'll explain motive waves, corrective waves, and how to apply the blue box strategy, which is the most important thing that you can use trading crypto using our main strategy. We'll then dive into the Bitcoin cycles and its correlation with the broader financial market using our Elliott Wave analysis, and we'll examine most importantly the path for Bitcoin. We'll be discussing how high it can reach this cycle. Then we'll shift into the alt season, analyzing why this cycle could be different from previous ones. We'll be highlighting key altcoins, identifying some top ones that you should be watching, and potential opportunity that could be presented in the near term. Finally, we'll wrap up with the Q&A session where you can be requesting forecasts for different altcoins, and we'll be provide some insights about these coins, short term or long term. So let's get it with the Elliott Wave theory and how to use our blue box strategy. Elliott Wave theory technically is explaining how the market trends, and with the use of Elliott Wave theory, you can read how the market follow a certain directional path. So when we explain the market trends, you should understand that it unfolds within a structured pattern. the movement and the direction of the trend consists of a 5-wave move. As you can see here in the chart, the main motive wave, which is called an impulse, is 1, 2, 3, 4, 5. And then, on the other hand, the corrective move, which comes against the trend, always comes in 3, 7, or 11 swings. We can see in this example a 3-wave pullback, label it as an ABC. Of course, these waves pattern appears across the market in long term or short term, doesn't matter. It's a 1-hour chart, 1-minute chart, or weekly chart. It's meant to define and read the market and provide traders with a structured framework for analyzing the movement. So if we want to understand, this is an example of a regular impulsive wave, which is a move, an upward impulse to the upside. A wave 1, wave 2 pullback, a wave 3 to the upside, wave 4, wave 5. And exactly the same, but to the downside with a downward impulse of action, a 5-wave move to the downside. So this is just a simple explanation how we represent an impulsive move. One of the most important thing is an extension within the waves. We see extended moves taking place around the market. We can identify them for trading purpose, of course, but we have 3 types of extension. These 3 extension usually exhibit exaggerated subdivision, making them longer and more complex compared to the rest of regular impulsive. And recognizing extension is crucial because they frequently indicate strong momentum and strong markets, which provide valuable trading opportunities. So in this example, we can see this is an extension within the first wave. Wave 1 is unfolding within another 5-wave structure here. We have the extension within the third wave, which is commonly seen around the market. We can see this basically around the stocks or forex market, the stock market or forex market. And we have the extension in wave 5, an extension within wave 5. We can see this with the commodities and also with the crypto market. If you are noticing this behavior in the recent year, I mean, you can see crypto market also tends to play as a commodity sometimes. That's why you see the extended wave 5 taking place. Now we want to really take a good example on the third wave extension, because this is one of the most common way, and this is usually the strongest and longest wave in the cycle. I mean, the strength of this wave is determining the majority of the cycles. And one of the most common mistakes that traders make in a bull cycle is prematurely selling after spotting the 5 waves, which is usually end up by being the third wave extension to the upside. I'll explain and I give an example, but this is often leads to missing the strongest move of the cycle, the continuation of the main trend, and you end up, of course, losing your position and missing this move. This is why we emphasize trading with the main trend rather than trying or attempting to go against it by selling. So when you see, for example, 1, 2, 3, 4, 5, you see a 5 swing. Usually beginners try to sell because they see a 5 waves. What end up happening in this case? This is just a 1, 2, 1, 2, 1, 2, which is in this case a triple nest. And instead of the market dropping from here, it starts the strong wave 3 of 3, which is usually the strongest, and the markets extend higher. These type of mistakes are common, and specifically in crypto market, we see a lot of extended move. That's why it's crucial to identify the third wave extension and try to avoid selling against it, which will help you catch a good trading opportunity, because when you're gonna use our system using the blue box area, it will allow you to be able to join the trend. Even if you missed the first leg or the second leg, you will always be able to join the market. So let's continue with the corrective structure, because these are the structures that will allow you to define buying opportunity or selling opportunity in extremes. We have the regular zigzag corrective wave pattern. This is the most simple structure. It's a common 3 waves pattern. Label it as an ABC with a 5-3-5 formation. It means the first leg is a wave A, a 5-wave decline in this case, a 3-wave bounce in wave B, followed by another 5 waves in C. So this type of structure usually happens just after a short-term or long-term cycle ends, but you always expect a C-wave pullback to happen. It doesn't occur always with these type of structure, but most importantly is to identify the 3 waves pullback. Wave C sometimes can extend, which could be tricky, but these are extreme cases that you can't be relying on it. Now, there is another type of a 3 waves corrective, which is more complex, which is a flat structure. This is not something that that you can trade easily. It's one of the more complex pattern. When you, for example, when you see a bullish trend taking place, you see a 3 waves pullback. You say, okay, this is done, and the market resume, make a new marginal high, another 3 waves, but the market doesn't continue with the 5 waves. So 3 wave down, 3 wave up, and then the market sharply decline within a 5 waves, which usually it gives the illusion that the trend has reversed. However, in reality, the market has simply completed a 3 waves flat structure, then it resumed the trend. It's kind of a trap for traders in this type of structure. That's why we avoid falling into this type of traps by always waiting for a confirmation if the market resumes the trend by making a 5 wave to the upside. And we always try to avoid trading within this flat correction, because sometimes the wave fee extend, which could be risky if you are a short-term trader, of course. Now, the most important structure that you can always rely on it more than a zigzag structure is the double corrective wave pattern, which we call the double 3, which is a 7 swing structure. It provides a structured way of the market to process correction. It takes longer time, making it easier to anticipate the price movement. It's unlike the zigzag structure, which can extend, as explained it earlier. It's a more balanced corrective way, and the way we identify the buying area in this case is using our blue box strategy, which we'll go in a moment. But the most important thing is that this type of 7 swing is a composition of 2 type of corrective structure. Of course, this could be any type of a correction. We are showing a zigzag structure. It's a 3 waves pullback. So we have 3 swings down. The market fails to resume the rally into new high. So you get another 3 wave bounce. Then it's followed by another 3 swings. So when you count the swings from the peak, in this case, you have 1, 2, 3, 4, 5, 6, 7. So it's a corrective 7 swing structure. And this is crucial because when you finish this correction, you will be finding a great trading opportunity, either of course to the upside or to the downside. But this type of correction is really more reliable than the zigzag structure, which is why when you find this type of correction in the market, you need to pay attention to it. I hope that was clear. So let's move on to the blue box strategy. The blue box represents a high frequency inflection zone derived from a structured relationship between sequences, cycle, and Fibonacci extension. This area technically highlights optimal points where traders can attempt entries in alignment with the dominant trend, because we only favor trading with the trend. The trend is your friend and you don't need to fight it, which increase, of course, the probability of successful trade while we minimize the risk. Now, if we take a look at some crypto examples using the blue box strategy, we can take a look here at the next slides. Let's start by showing an example of Bitcoin from November of last year. This is a typical 7 swing correction. You can see we had the first 3 waves pullback, A, B, C. The market failed. So this was your W. The market failed without rallying into new highs, then started going lower. So you are looking for, instead of a zigzag structure, which is the first 3 swings. Now you should be looking for the 7 swings. So now you have 1, 2, 3, 4, 5, 6, and you are looking for the 7 swings and to the blue box area. This is the blue box area, which we identify using the connector from the peak of the cycle and starting from the peak of the cycle using a connector from W and to X and a projection into the 100% with the extreme at the 1618 fib extension area. So this blue box is where you should be buying the market, looking for the market to resume the trend, which is, as you can see here, the main trend is bullish. We have the right side tag to help trader identify the trend. We don't recommend selling into these areas because the trend is bullish, so we don't recommend selling into correction. We rather wait for the market to get into these extremes, this buying opportunity, then we take them with a potential, of course, stop below the blue box area, in this case below the 618 area. So you had a buying opportunity around 66 with a stop below 63K, and we can see here the reaction. I mean, this was a perfect reaction from the blue box, touched the buying area, and then the market rallied to new highs. Of course, there is no guarantee that the market always will rally to new highs, but at least it gives you a three-wave bounce, which is all you need to protect your position by moving your stop to the break-even entry or by taking some profit. The market is technical, and it doesn't matter you are trading forex, stocks, crypto, it's all the same. You should always have a good strategy to help you, and the blue box strategy, which works 75% of the time, give you this edge. Now let's take a look at a second example using a different crypto, because we can hear around the media that everyone can say, many are saying that crypto is different and technical analysis doesn't work. We can see this is another example, a WXY. This is from December of last year, December 2024. You can see the first three ways pullback after this peak as an ABC, found a buying opportunity after a zigzag structure. You can see the market here within the blue box gave you a reaction higher. In this case, it didn't manage to make a new high. So even if you bought the blue box, you had a strong reaction. You could move your stop to the entry. You could take some profit. And then the market, what happens? Decides to do the 7 swings. It drops lower. So your position will be closed at break even. And you move to buying the next extreme after 1, 2, 3, 4, 5, 6, 7 swings. So this was the next buying area around 0.76, 0.50. And then the market reacts from there again. So you can see these extreme high frequency areas are used to identify trading opportunity. In this case to the upside, because we are looking to buy the market with this example, but you can see the same also with selling opportunities. So overall, I mean, the blue box strategy has a 75 win percent range, which gives you enough edge to beat the market. As you can see, if the reaction fails, the strategy ensures a risk-free position. So I hope everything is clear. Okay, thank you. Do you have any question about the strategy and the explanation? Let me know. We'll be moving to the next slide. Remember, we'll have later on a Q&A session. We'll be talking more deeply there, more freely. I will let you know if you have, let me know if you have also any question about the Elliott Wave theory. We'll be discussing that alongside our forecast. Okay, so now let's shift our focus on the Bitcoin analysis. Okay. So let's start by exploring the famous 4-year cycle and the correlation with the broader market before diving into the exact Elliott Wave count and the probable path or trajectory for this year. Remember, Bitcoin, I mean, it's not the newest instrument. I mean, it's been now 15 years, or basically, technically speaking, 16 years, since 2009, when the first code was written. It has historically followed the 4-year cycle, largely driven by its halving events, which reduces the mining reward, as you probably know, and which impact also the supply dynamics. I will show you here just to keep things simple. We are not going to dive, of course, technically speaking, into this fundamental event. We are only going to focus on the technical aspect of the market. But basically, the idea is that since 2009, Bitcoin has been having a 4-year cycle, which includes a rally to the upside, a correction, a strong rally to the upside, a big correction, a strong rally to the upside, a big correction. Of course, you can define the cycle in different ways. Some are using the lows to define the cycle. Some are using the peaks. But technically speaking, if you count the days or the weekly or the monthly candle, it's basically the same. You can see here a more representative way. If we use the recent cycle that technically speaking started from December 2018 and ended in November, that was 35 bars, 35 months. Then it was followed by a 12-month correction. Overall, you have a 47 month, or basically you can say 4 years. It's missing 1 month from years, which is 48, but that's a 4-year cycle. The previous cycle, the cycle before it in 2017, we had the same 47 bars. So that's another 4-year cycle. The only exception was the first cycle, because there is a disagreement where or when you can start counting the bars. Because if you take the first early days, there wasn't really trading in Bitcoin. There was only some peer-to-peer trading. The electronic exchange wasn't available for everyone, of course. And in that case, if you consider the early days or you forget about them, you can have a longer cycle. But overall, if we consider that the 4-year cycle is still in progress, this, technically speaking, allow us to count the next potential and for this cycle, which comes around this October 2025, and the next bear market will take us into October 2026. Now, let's move on beyond this 4-year cycle. I just want to give you a brief about it, because this is really important later on to use the timing aspect to help us identify how long do we have before the cycle ends. Beyond these cycles, we have the Bitcoin correlation with the broader market, like we have the correlation with the dollar index, with the stock market like S&P and Nasdaq, and most importantly, the global liquidity, which will be taken a look in a second. So if we take a look at this chart of the Dixie, which is the dollar index, and if we add here Bitcoin, and this is the weekly chart, we can see, of course, I'll start by saying there is some kind of misconception about the dollar index. Some people think, okay, we have the dollar trading against the Bitcoin, so if the dollar trades higher, Bitcoin will go down. If the Bitcoin goes higher, then the dollar is going down. Technically speaking, yes, that's happening, but it's not a tick by tick, and we have different phases. And most importantly for us is to identify the phase where Bitcoin is more likely to rally and when Bitcoin is more likely to drop. Because we can see in this example, back in 2020, which is the perfect example to start with, because more of the correlation started to show the break, and the two phases is around 2020. You can see this big drop. We can see starting from here to show you the example. You can see in 2020, when the dollar peaked and started dropping, that's when the rally in BTC started. Most importantly, which I wanted to make an important note about it, however, that wasn't the entire rally. That was the first stage of the entire rally. I can add another line here. See, the first stage, they were opposite to each other. However, the late stage of the dollar dropping, when the dollar started stabilizing and going basically sideways, you can see here it's basically sideways when it reaches this area. It moved within a sideways market. That still allowed BTC to continue higher onto the late stage of the market. I believe at this stage we are seeing a similar phase, but let me continue with this correlation, because when Bitcoin had its own peak, you can see the last phase of the market, the dollar did rally alongside Bitcoin in a second dimension. It didn't strongly rally, but it played a second dimension before the peak took place, and then when Bitcoin started dropping, we saw that the acceleration rally happened in the dollar. This is really important because that basically finished an entire cycle, and we are seeing a deja vu taking place again. The dollar peaking, like we saw here. Bitcoin started rallying. What happened with the dollar? It dropped, but stayed sideways, playing the second dimension game before, if I zoom in here, in March of last year, we are seeing some type of second dimension playing out, which is really important. At this stage, Bitcoin and the dollar started trading together. So this positive correlation with the dollar, you can see back here, it happened also in the last, or let's say in the late phase of the cycle, which is really important because at the same time they are seeing positive correlation in the second dimension. If I hide Bitcoin, you can see that this was a sideways phase for the dollar. You see this? This was basically sideways. And this sideways happened when? After the dollar finished its drop. I put it red for you. We are seeing the same phase here. Dollar is dropping. Bitcoin is at the same time, the correlation was positive for a moment. And now we are seeing the switch, which means this Bitcoin breaking into new highs. The dollar could be seeing a similar phase. Why I would be saying this, I'll explain in the next chart with the dollar. We need to see the dollar maybe sideways or even make a new lows to allow Bitcoin to finish this leg higher, like we saw back here before this bigger bounce happened in the dollar. Because when the dollar finished this entire correction, which will be happening either by the end of this year or next year, then the dollar will be bouncing. This bounce in the dollar will mean Bitcoin will be correcting lower. So this is just a brief explanation of the DAO. We can't go into details because it's not the best trading tool to just go correlation tick by tick. Correlation help you to identify shifts in the market, to know when the next move could be taking place. The reason I'm bringing this to your attention because, let me show you this chart. Let's go to the monthly of the DXY monthly chart. We know that at this stage, the dollar is showing 5 waves from 2008. 1, 2, 3, 4, 5 to the upside. And we believe that this entire cycle from 2008 has ended. Nonetheless, ended or not, it's showing 3 swings from the peak, which is still not reaching our target area around 95. When the dollar reaches this area, there will be a big bounce in the dollar happening. Later on, of course, it doesn't need to make a 7. It could even resume the rally higher. But the most important thing for us in relation to Bitcoin is there will be a bounce taking place after the dollar ends. So that's why I'm saying this is basically similar. Even it's having a different structure, but when the dollar finishes this decline, that's what the final phase of Bitcoin. We are seeing the same here taking place, that the dollar is approaching that final phase, which should be around the peak for BTC. Because when the dollar is going to bounce, you expect Bitcoin to drop at this stage, because we are talking about monthly and weekly cycles here. Okay, I see that comment about the flat. Yeah, that's a technical aspect that could be counted if BTC did a flat or not. But most importantly, at that stage, you know the turn happened when the dollar ended this decline. So we know exactly that when the dollar finishes the cycle and start turning higher, BTC could be approaching a major peak. So now let's continue. Let's see other different market correlation, because I mean, since remember, with the introduction of Bitcoin ETFs and futures and the integration into the traditional stock market, Bitcoin basically has become less volatile, more correlated to the major stock market. I mean, we can see here, for example, this is the S&P index, of course, S&P 500. you can see the correlation here. It's not tick by tick, of course. There is some moment when BTC didn't drop below the previous low, like for example here in 2020, while S&P took the previous low. But the same here when BTC made the new highs, S&P was slightly lagging, but they catch up. But you can see the overall trend is the same. This is still the same. See, rally together, a pullback, rally together. This was kind of sideways, then corrected together. Both rally together again. You see, this is the second dimension. S&P continued to rally, did a correction and happen in BTC. Then both almost peaked around the same. Then they drop together. So we are seeing the correlation here. Same with the Nasdaq, which is more correlated to the technology sector, as we consider, many consider Bitcoin as part of the correlation. Oh, that's great. So Nasdaq, S&P, positive correlation with the dollar, with the Bitcoin, dollar, negative correlation in the dollar happening with Bitcoin, but it's not entirely all the time. There is phases where the market could play the second dimension, and we could be using that to our advantage to define extreme area. So this is over the Bitcoin correlation and cycle. Just we need to understand that with this 4-year cycle behavior, there is important thing that we need to pay attention, because remember, in the early days, Bitcoin was known for its extreme price swings, making trading basically highly unpredictable. But with the recent institutional adoption, I apologize for the noise. With the institutional adoption has increased, we have observed more structured trend, particularly in corrections, with significant lower volatility, despite we are still seeing big swings. However, this significantly lower volatility compared to previous cycle naturally results in lower gains, but steady and consistent growth. That's how the diminishing returns works and affecting both gains and losses. So we can see the first cycle in 2011, we saw basically 300% move, followed by a 93% correction. What happened next cycle? A huge diminishing return, 58,000% move to the upside, followed by 86% move. Now you can see the drop continue significantly from 58 into 19,000% move in 2017, and the decline also 84. So we can see the consistent of the return being less and less from each low of the cycle, and even the decline is starting to slow. Ending with the last previous cycle, we only saw 2000%. So basically only 20x from the lows with a 77%. Of course, this cycle is still in progress, but we can see, technically speaking, now we are only up, we are only up basically 600%. So we are not even reaching half of the previous gains that we saw in 2021. We didn't even do a 10x from the lows, which could put Bitcoin around 178. But you can see that diminishing return is playing out. Despite we are, in terms of time, we are late in the cycle, but the returns are definitely diminishing. So even if we project later on some timing cycles, the percentage of the gain, we don't believe that's going to exceed the previous cycle, which is 2000% move. If you put 2000 move to the upside, it put Bitcoin above 300K. So one of the questions that could be already answered, we don't think, based on this data, that Bitcoin will be trading above 3000K in this cycle. It could happen, of course, later on in the next cycle, or maybe in 2028 or 2030 or 32. But for now, based on this diminishing return, we think that Bitcoin will stay below 300K. Same for the decline. We don't think Bitcoin is going to drop more than 78%. We had the 77% in the previous cycle. So maybe in this cycle, we could be seeing 70 to 70% drop. It's still a significant move, but looking at the type of structure, it's becoming more corrective, more structured, which allow you to understand how the market works. So I hope that was clear, because recognizing these relationships help really traders to anticipate the major trend shift and position accordingly. So now let's really move on to break the Elliott Wave structure applied to Bitcoin and identify the most likely key prices target for the current cycle. If you have any question, you can always ask me during this presentation. I'll keep the question limited to later on when you are asking about any other coins, because we'll be having a Q&A session. Okay, so this is the monthly, sorry, I'll switch to the weekly for better explanation here. So this is the current Elliott Wave count that we are showing. I'll start by explaining the cycle, but we'll explain different views and different Elliott Wave count. Now, most importantly, we need to understand, if you go back really quickly to this chart, I'll just delete the labels, remove the log, to understand that Bitcoin is bullish in all time frames. We need to understand this fact, because you can see Bitcoin keeps creating higher highs. You have every cycle, you have a higher high sequence followed by a higher low. So we need to understand that this is a constructive, impulsive, or bullish sequence to the upside, and Bitcoin should remain bullish at this stage. The next part is to understand that the cycles work, as we explained it earlier, in 5-wave moves. If we consider that the cycle from 2018 was a 5-wave advance, we won't be discussing the flat possibility for now or the internal, but we are going with the swings. We have 5 swing up. The current cycle already have 1, 2, 3, 4, 5. We have another 5-wave to the upside. And what happened specifically yesterday or in the recent tools helped us to confirm the next move to the upside or the next section, because we did manage to make a new all-time highs. So now, technically speaking, we do have an incomplete bullish sequence even within the cycle. We have different counts that could be applied to this, but most importantly, if we are going with the more aggressive approach, which we usually use at Elliott Wave Forecast, counting that this was 1, 2, 3, 4, 5 that corrected here, then we can project that the next extension, that could be a wave 3 in red in this case, could take Bitcoin to at least 168, which is the 100% of this 1 and 2, all the way toward 225. So you can see there is a possibility for Bitcoin to extend within a third wave. How this will be reflected in the market, because if this is really a wave 3, if you remember, we showed you earlier in the extension, this will be the strongest move in the cycle. However, in this case, we use also the RSI to help us identify that you can see this was the strongest momentum. We could be facing the case that this was an extended wave 1. We can see the separation between wave 1 and 3. There is no overlap. So in case we had an extended wave 1, then we don't need to have a big extension in wave 3. So at least what we know at this stage, that opening the previous peak, open it as for us a bullish sequence. And this is really important because it opened the target toward at least 168. We don't use the logarithmic charts for forecasting, because it's not the best tool to define the technical targets, and most importantly, it's better to use logarithmic charts for identifying the cycles. These type of structure are more clear maybe in the logarithmic charts, but when you try to label them on the real chart or the normal chart, it gives you better perspective of the market. So let's continue, and as I mentioned earlier, for your coin question, don't worry, we'll be taking a look at them at the end of the session with the Q&A session. So this move to the upside, either if it's going to be a wave 3 of 3, could be the strongest move, could even open further upside later on, but you can see it's going to be maybe taking more time. This is one of the things that could be stopping us from thinking how this could be wave 3. Either it's going to be a strong move in the coming few months to break higher, because wave 3 usually is the strongest, like we see, for example, here. You see this acceleration with this internal cycle. This internal cycle is a 5-way move, 1, 2, 3, 4, 5, and the strongest waves always happen in the middle in this case. So if we are starting this wave 3 of the cycle, then we are expecting this to be the strongest wave. Given that we are at the end stage of the cycle, of the 4-year cycle, this could be a less probability scenario. However, the more aggressive approach is to look for extension higher. We don't have any disagreement about that because we know the recent breakup of this peak is now giving us an incomplete sequence. We can count the swings from here. We have 1, 2, 3, 4, 5, 6, 7 swings and 2 new highs. When you have 7 swings and 2 new highs, which is technically speaking a corrective sequence, we can't be having an impulsive cycle with 7 swings. So you would be needing a 9 swing at least to the upside, which means Bitcoin is at least missing 2 more swings. If you use a different count in this case, if you use a different count, which we can see here, is still nothing unvalidated, but if the wave 3 is already in progress, that could give us the idea that we are already approaching the end, because if we use the connector from the previous cycle from March 2024, we can see that this separation that took place after the recent pullback and the break into new highs, more importantly, is still showing divergence. We can consider that this is still a nesting in progress, and the break to the upside give us slightly different target, but it's the same idea. What is more important here, that the current bullish cycle is showing either, yes, I'll go into that in a moment. Either it's showing, we can consider this as a 5 waves, 1, 2, 3, 4, 5 swings, but with the divergence still showing here, we can go with the more aggressive approach that this is still nesting. You can see in both scenarios, the previous one here or the recent one, the market is still suggesting that you should be more upside. Now with this type of structure, we can use the connector from the recent decline in April, and using the connector from August 2024, we have a projection higher at least toward 134, which is the equal X of this 1 and 2. So we can expect 134, 172, but if this is going to start soon creating a series of 3s and 4s to finish this wave 5 of 3, then a pullback in wave 4 and wave 5, you can expect the choppiness to happen here before this entire cycle ends, which is a cycle from 2002, of course. Now this minimum target around 134 toward 172 could be also being seen. I mean, if you expect this to happen in the near term, we expect a projection between this summer and by the end of this year. This could be a potential target, but what you're gonna do at this stage, looking at both scenarios, is to keep buying the pullbacks in 307 swings, because we did manage to make new highs. We have the confirmation that we have a bullish sequence in the short term, even if you consider that this could be a wave 5 taking place, which is the third scenario that we'll be discussing in a moment. This is not yet done, and it's at least calling for 134. So if I use the final count, that could be a different approach, but this is the less aggressive approach, and it's applied to the idea of having a correction taking place by the end of this year, basically by October 2025, and it's also based on the idea that the 4-year cycle is still in progress. If we don't want to go against the data, I mean, if the statistics are working, and why do I want to fight the cycle? So in this case, if the cycle is facing the final stage, and as I showed you also, the dollar could be soon reaching the equal X area, which could mean a peak, a low in the dollar could be meaning a peak in the Bitcoin, then we know that we don't have too much time or too much space for the market to rally too much. we know anything could happen, but technically speaking, if we can count this as a 1, 2, 3, 4, 5, we don't have the overlap between the wave 4 and the wave 1. Most importantly, the wave 3 is longer than the wave 1. So there is no invalidation of the Elliott wave structure here. And now we can get the extension in wave 5. If the extension is taking place, then we can project a minimum target, as I showed you earlier, which is the equal legs coming from here around 135. And we can see that the most importantly, I'll hide this for a moment. We can see that the first main correction took place for this entire cycle after we had the first connector came from 107. What is 107 here? It's the equal legs using this 1 and 2. So we can see that this cycle is using the same correlation and fib extension between these connectors. So if this is happening within the same cycle, then we can assume that this is still within the same cycle from November 22 in terms of swings, and therefore it's missing a fifth wave higher. Fifth wave higher doesn't mean we are soon ending. Technically speaking, in that case, we already have a fifth swing higher. This cycle already have a minimum number of swings to call it completed, but in terms of correlation with the rest of the market, we still expect at least another swing higher in the stock market. We still expect, as I showed you earlier, we still expect the dollar at least with 2 or 1 more swing to the downside with this equal legs. So this push lower in the dollar, which we expecting to happen. This push lower in the dollar is going to be pushing Bitcoin higher into the cycle. But you can see, similar to the dollar, we don't have too much space for the dollar to reach that area. It can extend, of course, beyond the 100%, but what is giving you this idea that we are within a wave 5 in Bitcoin is the late phase of the market. We can add to that that's good, because yeah, bringing the RSI, which I showed earlier, is really good to identify, because we know that there is divergence. So when you have divergence, basically you have two options to go with it. Either the most aggressive bullish scenario, you could be nesting like this, 1 2 1 2 when you explode to the upside. In this case in particular, the cycle could extend even into 2026, as I showed, for example, here earlier. This could be, let me go back to this chart, this could be maybe an extended cycle similar to the one that we showed from 2010 to 2015. We saw an extended 4-year rally before 1-year pullback. So in that case, if we project the 61 months like we saw in the early cycle, it puts us into 2017 with a peak around 2026. So that's why if we are going to see an impulsive structure within a nest here, the cycle could extend. However, this scenario is also valid, and without trying to fight the market at this stage, if the dollar is approaching a low, this could be still a valid approach, because you can see we have 5 waves even in the RSI in the first leg, and this could have been an extended wave 1. If this was an extended wave 1, that explains the divergence that we are seeing, because when you have an extended wave 1, the rest of waves could fall below in momentum, and this is why it explains this divergence. We saw similar thing in the early days, which we don't need to discuss in particular, but this is one of the approaches that you need to keep in mind. We are here, we are not trying to pick the top for the market. We need to understand how high can it go and where we are at this stage. If you are bullish with the most aggressive view, you still expect in BTC to trade to above 150. Even if you are looking for a less aggressive approach, this is still a valid path for you. You still expect Bitcoin to go higher, and you should be looking to buy the pullbacks in 3, 7, 11 swings, as I showed you earlier, using the blue box areas, because this is really important even for the short-term traders. I'll be going into that in a moment. So is everything clear about the Bitcoin cycles here and approach? Now for the targets, which is the most important thing. I know everyone is looking for the tags. Now, I showed you in this previous count that a minimum target for this aggressive approach is 168, and we can go all the way to a 225 if we extend into 2026, and this is an extended wave 3. However, so we can say that above 200 is technically speaking possible. Is it more likely or less likely? It's based on the correlation with the rest of the market, and the late stage of Bitcoin could be a less probable scenario. For me personally, the highest probability scenario, which we take in step by step, we could be reaching 140, 150, 140k, 143, and we can use the equal legs area of the cycle from August of last year and to this correction from April, which give us a good target around 135, with the 618 area coming around 173. I think with the limited time that we have, and specifically if Bitcoin is entering bonus time after October, if you find Bitcoin reaching these areas, I think personally this is a good time to start looking for take profits, protecting your gains, and looking to go into stable coins during that period of time, because this is technically speaking, if you see the dollar at equal legs and Bitcoin around 135, 150, then that's a big warning sign for me. We are going there for sure. Just allow us a few moments. So now let's, if you don't have any question about the current Bitcoin counts or structures, let's move on to the next topic. I know everyone is looking for this topic of Altseason, so let's give just a brief explanation, and then we move on to the coins, and you can ask question about them. Sure, no problem. Just allow us a second here. Okay, so what is really an Altseason? I mean, if we want to take that technical aspect of the Altseason, it's just, as everyone basically knows, is when the altcoins rally. But technically speaking, it's when the 75% of the top 50 coins outperform Bitcoin over the last 90 days. So basically over the recent 3 months, if these coins outperform Bitcoin, then we are entering a altcoin season. However, social media often have a lot of misconception. Many expect ETH to be at new all-time highs, Bitcoin dominance to collapse. They expect every altcoin to skyrocket 100x every day. Unfortunately, that did happen before, but there was a lot of adjustment in the recent years, even in the previous cycle. The cycle is different, like the previous cycle was different from the previous one, and the market is always dynamic. That's why it requires adaptation rather than relying on past trend. Even we know that the market doesn't repeat itself, but it rhymes. So that's why you need to understand the market is different. In previous cycle, of course, traders could simply just buy any random altcoin and wait for massive gains, but they are missing two key factors. Everyone is overlooking that the number of coins in previous cycles, for example, in 2017, we had basically fewer than 500 coin, which allowed liquidity to easily pump altcoins. That's why we had huge multiple gains. I'll get into that. However, the liquidity in 2021 didn't grow significantly. I mean, the market cap, of course, the market cap doubled or tripled of all the market cap of the entire crypto market. However, we had over 10,000 coins. I mean, the market expanded, leading to basically to a sector rotation, and it was basically an explosion in altcoins, but in different sector during different times, which is basically the dilatation of the market. I mean, we saw the capital shift from DeFi, for example, in summer 2020 to BNB ecosystem in early 2021. Then we had the NFT and gaming by late 2021. You see what I'm saying here? The shift in capital was forced by these explosion and expansion in the coins. And on-chain data, of course, that's the most important thing, was showing that clearly the liquidity cycle moved between these sectors based on the narrative. Of course, that's really important also to say that in 2021, majority of the old coins from 2027 or 2025, 2015, sorry, 2015, 2017, never reached new ATH or never made new all-time highs, and countless new projects failed from the start. People only look at the winners. That's why they forget how the market works, or they really don't understand it. I mean, the market only highlights the big winners, which create this illusion of making money the easiest way. That's why, I mean, despite the reality that majority crashed later on 99%, which left investor buying with us position. That's why, I mean, it's really difficult to trade the market. Doesn't matter what you see over the social media. You always need to have a good plan and a good strategy. So let's go on to the detail. I mean, the cycle really demands selectivity. We really need to look for the strongest coins, the new emerging narrative. We need to avoid the weaker project because they will struggle to break previous peaks. We need to understand how the liquidity rotation happens and the narrative-driven investment, because it's crucial to navigate this altcoin season in particular. I'm seeing a lot of questions. Don't worry, we'll be going over the question when we finish the last segment about the Altseason. Okay, so what is really important here to understand, in 2025, we saw basically over 100,000 cryptocurrency. I mean, if we really consider every speculative low coin, I mean, the number exceeds 1 million. So if you do the math, the overall market liquidity really didn't double, specifically in crypto, meaning the capital is spread thin across these thousands of assets in the market. So if you are seeing that the market have million coins having almost the same liquidity as we saw before, what do you think it happens? The market, either you're going to see less gains, or you're going to see only selective type of coins that manage to break into new highs or rally exponentially. That's why this is really important to understand. Only small handful of coins capture the liquidity and thrive during the cycle. That's why this is different from previous. In previous cycle, it was really simple. I mean, despite this big change, we are seeing that there is a lot of similarity between the previous cycle. I mean, DeFi projects pumped in 2023, like we saw in 2020. We saw gaming in late 2023 pumping. It is a different narrative, but happened in 2021. We saw the new narrative of EI project in early 2024. And then, of course, the meme coin dominated the mid to late 2024, which basically absorbed the entire liquidity. Even capital started shifting back to AI by the year end, but it still basically was memes. So not every coin, not every altcoin is going to give you a win. Some coins, of course, did manage to make massive gains, like 100x, 1000x, but majority are basically stuck to the regular gains, which is still pretty good, doing a 5x or 4x. Okay, so let's go on to the charts. Maybe I took a longer time than expected to explain the overall idea of the altcoin, but it's really important because the overhyped project this cycle with the $1 billion valuation really changed the game. That's why you don't have too much option for you to trade, and that's why there is a lot of coins that could mislead you to thinking that the market is really not doing whatever you like. So let's start by the Bitcoin dominance. Okay, this is a really important question. I will answer it before we do this, because the blue box is something that we rely on it and we're going to use for every cycle. The blue box is simple. I'll just give an example here. I'll go back to the Bitcoin to just give you how did we measure. So I'll use this example. I'll delete this, and this is a good example, which is a really good question. Now, this cycle ended after rallying in 5 ways. When this cycle ended, the market corrected in 3. Even there was a good buying opportunity, and then the market pulled back, then it broke into new highs. The moment it breaks into new highs, this creates a sequence to the upside. So the way to measure it, you take the Fibonacci extension starting from the low of the cycle. In this case, you measure it N2 from the peak of the cycle and to the pullback. That gives you this extension. I'll show you doing it from the scratch. When you measure this move and give you that 07. That was, for example, my target earlier this year. And that's why, for example, me personally trading the crypto market, I was taking profit in majority of my coins during that time, because I was expecting a pullback to happen, not based on fundamental, not based on what happened in politics, not happens with the market early this year. You know what happens, even with the tariffs and war and everything, nothing to have to do with fundamentals. You see this equal X area? It hit perfectly, then the market started the correction. I can show you the same example here, for example, in S&P. Everyone is talking about the market correction in the recent two months because of the tariffs, but technically speaking, all it happens is that the cycle from 2020 reached the equal X area. I put here the exact equal X. Sorry, this one. You see here, S&P. Why S&P did the pullback recently? Why the entire financial market corrected? S&P reached the 100% from 2020. It was a pure technical move. Remember, we are trading in a computer world, high frequency. Everyone is trading using EI. Everyone is trading using bots. And the world is moving fast. So you can see perfect hit of the equal X, the market corrected. Same happened with Bitcoin. Bitcoin reached this equal X area from the lows around 107, and it started the correction. I hope that answered the question how to measure it, but you need to understand that the market, we really don't follow the fundamentals and don't care about. We know that fundamental stuff is after the fact. When the market drops, you're gonna, okay, let's search what happens. Then you find the reason. But technically speaking, the market already give you the hint. It reached equal X in BTC. S&P reached equal X, and that's why the correction happened in February. The market peaked in late January, early February of this year. And again, if we show the S&P, it's still in correlation. Why the market rallied in April? S&P reached equal X. It was a buying opportunity. Even Bitcoin, internally, despite having an ugly structure, but Bitcoin was also at equal X. You see here? This was the blue box area, which we, of course, presenting in our system. This was, technically speaking, also the buying area for Bitcoin. Same happened for S&P. That's why you see the correlation is important. When you find S&P at equal X, for example, the dollar at extreme, Bitcoin extreme, you know that the market is going to shift. That's why we are introducing this approach to help you identify trading opportunity. Okay, let's continue. Sure, no problem. So let's go back to the Bitcoin dominance. Sure. Okay, so I mean, usually with the altcoin, of course, everyone is looking for the Bitcoin dominance to drop. However, what happens here, Bitcoin dominance been rallying since January 2022. Basically, it's been rallying the whole time. Despite, I mean, Bitcoin has been leading the move. Despite we saw many alts trading to the upside, Bitcoin dominance never had this type of pullback. I mean, usually what people are the expectation for the alt season to happen is that you see this big drop and this big drop. Unfortunately, that's not the case. I mean, at least for now, that's not the case. We did saw altcoins rallying without the Bitcoin dominance. Now, how we can explain this? One of the factors that I mentioned earlier, that the market dilatation and expansion into these coins is not allowing the liquidity to be focused in a small group of coins. It's not allowing the market to act as before. And what I want to show here with the Bitcoin dominance, that the Bitcoin dominance behavior is not what everyone is thinking about. Like we are seeing that expecting Bitcoin dominance to drop below 20 or 30 or 40% during the next alt season. You can see that the Bitcoin dominance starting making higher lows. The previous cycle, the dominance really never made new lows. So this is really, technically speaking, a big warning sign. We saw that the rally in 2018 was basically a five-way move, 1, 2, 3, 4, 5, and even we can consider this as a flat with a new marginal high, A, B, C. So if this is really a five-way move, then the market, sorry, the Bitcoin dominance is, technically speaking, looking for another five-wave advance, which could take it to the next target at equal X area around 77%. I'm not saying this is going to happen this cycle, but I'm saying that the change in behavior could lead to making a higher lows here, could mean that the Bitcoin dominance should be looking for a higher high later on, maybe in the next cycle. Sorry. So this is really important for us to identify why the cycle also is behaving differently, because the market is focusing on Bitcoin, and in this, if this is really the case, then the Bitcoin dominance, which is basically speaking in the late stage at this cycle, could be seeing a pullback, but I don't think this is going to be a big pullback like so before. I don't think this is going to be breaking the lows. I think, first of all, it will be holding this big channel, which means we're going to see less gains in alts, less volatility, and more importantly, less liquidity. If we get something similar to this for the next cycle, that's going to be the biggest maybe buying opportunity for us, because from this, you can expect a big correction to happen, maybe something similar to this, and I think that will happen on the next cycle. So for the current cycle, the Bitcoin dominance is, technically speaking, in the short term within a short-term extreme area. It's already showing 5 waves from the lows. I will show in the short term also. I mean, we can see here even the swings 1, 2, 3, 4, 5. But most importantly, it's also about the trend line. I mean, there is a lot of signal that we could be, yes, short-term peaking, but I don't think this pullback is going to be big enough in terms of time and price to allow everything to rally. If the Bitcoin dominance is going to only pull back, then that means not everything will be able to take advantage of these rallies. Sure, that's something we need to keep in mind. I didn't understand that, but I will read it again in a moment. Pullback diagonal wave 4. Yeah, that's a different type of structure that we are not discussing at this stage. But yeah, I'll take a look at it in the Q&A session for sure. So with the Bitcoin dominance is about to pull back, we can reflect this because people are forgetting one more important thing here. Let me just show you this chart in a second. Okay. Bitcoin dominance, yeah, that's really a good question. Of course, the Bitcoin dominance is basically representing the percentage of the market cap of BTC compared to the rest of the cryptocurrencies. For example, if you have 10 coins, of course, including BTC, and BTC could represent 10% of, for example, let's say it's 1 trillion market cap in the entire market. If BTC only represents 10%, then BTC is at 100 billion market cap. So the dominance of Bitcoin usually means that Bitcoin is growing, growing in market cap, while the altcoins are growing but in a slower pace, which means Bitcoin is basically outpacing. Sorry, I had to take a sip of water. So if Bitcoin is outpacing the altcoins, technically speaking, you would be better during the lows of 2022. If you just bought Bitcoin and held to your Bitcoin, it was basically better than the majority of altcoins. Of course, we always have exception of altcoins doing 20, 50, 100x. But overall, if you just held to your Bitcoin, you are making better profits than just jumping from coin to coin. That's why you can see this Bitcoin dominance chart moving higher, while the other chart, which is representing the rest of the cryptocurrency, let's get it here. Let's see. I mean, this is the total market cap, but let's see. Okay, this is a perfect example. So this is the total market cap excluding Bitcoin. So if you just see the market cap excluding Bitcoin, it means majority of alts are here. Not every one of them, but basically 90% of the coins are here, representing the market cap, is still below the previous peak. And most importantly, it still didn't even make new all-time highs. See? If you compare this to Bitcoin, if we now put for example, the chart of Bitcoin, you see Bitcoin? This is the previous peak. Bitcoin is way above. So Bitcoin is leading the market. The rest of altcoins are still lagging, which is reflected on this Bitcoin dominance chart. That's why you see the dominance continue higher. However, when this the dominance start pulling back, that means, of course, I mean, this is not a correlation this type, because I think many are using this Bitcoin dominance in a wrong way, because what we really need to focus is this chart that I'm going to show you here in a second. When you look at the altcoin index, it's not really it's not a tool to use for, but it gives you the overall idea, because we had the misconception that this year there was never an alt season. However, the data shows otherwise. I mean, you see this altcoin index, it's just a tool to use. I mean, it's free on the internet, you can see and watch it. But it's when there was a Bitcoin season in early 2023, that basically was the right time to buy specific coins, specific altcoins. Of course, that's another subject we'll go into a second, how to identify which sector is best for investment at this stage, or how you could identify, because not every coin rallied during that time. But you can see we had, technically speaking, even a small alt season, but it did happen. Then we had the pullback later on in 2024, before finally by the end of the year we saw the massive rally in specific sectors, specifically memes and EI, and that was another altcoin season. People really don't want to rely on this and don't use it, but if you are on the right sector, you are following the right market, you definitely did see an alt season happen, a mini alt season happen into, if you want to call it like that, 2024 and 2023. And I believe we are in the same stage now, because you can see we are still within the Bitcoin season region, which means with Bitcoin again breaking into new all-time highs, go back to this chart, which is the most important thing to understand. With this bullish sequence taking place in Bitcoin, that means that we are still expecting extension high. The moment Bitcoin breaks into new highs, like we saw, for example, in November, Bitcoin break into new highs. What happened here? Bitcoin, we saw alts outperforming Bitcoin. You see in early 2024 here, basically the same. When Bitcoin rallied here, the alts outperformed Bitcoin. So the moment Bitcoin breaks higher, it's a confirmation for alts, and people try to jump and catch because they know they are not going to make a 20x in Bitcoin from here for sure. I mean, you are not going to even get a 2x in a shorter time frame with Bitcoin. But if you buy an alt, you have a higher chance of making that. So that's why you see the shift in trend, and we can see this reflected most importantly in the volume. I mean, this is the most important thing that many people are ignoring. People are saying we didn't have any alt season, but the on-chain data says otherwise. If you look at the volume from all the dexes, I mean, this is only for decentralized exchange. We are not talking about Coinbase or Binance. We are talking about using a Web3 wallet. But this is important to see the volume. You see here in March 2024, which can be reflected if I go back to this peak in Altseason in 2024. You see here, it started from January and then we drop it. You see the volume started to pick up from the start of 2024. This volume, of course, exceeded the previous 2 years, which means there was big money taken entering the market. The same happened by the end of 2024. In October, I mean, the moment Bitcoin resumed the rally in November and started breaking into new highs, you see, a lot of on-chain activity happened in all chain. I mean, specifically on Solana, of course, we know what happened in Solana with the meme coins, even in Ethereum, even in BNB. But you see, this type of activity is signaling that there was activity for altcoins, because we are not talking about Bitcoin here. We are talking about different type of blockchains, which is completely different. No, not necessarily. Even Bitcoin makes new highs and yeah, could drop directly, but during that time, I don't have the data from 2021 here, but that's exactly, you see, if you are referring to this, during this time, the moment Bitcoin dropped here, but during this time, you had a lot of altcoin rallying, which is why we are talking about and giving you different scenario. Even if we are seeing a wave 5, based on the correlation with the rest of the market, we still have time until at least October 2025. And during this period of basically this summer, the market should extend and we'll be seeing alts following, because when you look at the data, we are only starting to pick up. I don't think we're gonna see lower highs in the volume. I think the volume will expand because everyone is expecting, specifically now Bitcoin is above 100K. That's one of the triggers psychologically for traders. And most importantly, this could drive a lot of volume in alts because they've been waiting for this alt season and we are running out of time. So we are seeing a lot of on-chain data that suggests even the wallet activity. I saw a chart, which I checked in Dune also, that the activity in Web3 wallet, specifically for Binance, BNB chain, that was exceeding the peak from 2021. So there is a lot of activity starting from last month. What happened last month, as I showed you earlier, it was just a buying opportunity in Bitcoin. And what happened? Money started to flow into alts. We are already seeing a lot of alts rallying within 3 or 5x from the lows. We can always consider that the market is not going to give you perfect, of course, peak. You don't. The most important thing, you don't try to pick the peak. You need to make a strategy how to profit from the advance. Then you have to always have an exit strategy. I mean, I'll explain this also later on during by the end of the presentation, because most importantly, if you don't have an exit strategy for any type of trading, cryptocurrency or forex, then of course you shouldn't be already trading, because what we have explained earlier in the blue box strategy, it always gives you a good entry, a good risk reward, and most importantly, it allows you to identify where you should be leaving the market. I want to, before we go over that, I want to continue with the altcoins, because people forget that the moment the market shift and the moment the volume start that printing, we need to be on the right sector. I mean, I'll give you just an example. In the recent 30 days, see, this is the recent 30 days strength. Let's say this is a ladder for altcoins, or this is representing the most narrative that are being discussed here. If you are using the growth and price, then you can see that the EI agent are still leading the way at this stage. In the recent 30 days, the growth in the EI sector is leading, followed by meme coins, and still this is EI. If you combine them together, I mean, this is basically outperforming everything, followed by gaming, which happened before. But most importantly, you need to focus on the leaders. If you are entering the final phase of the market, you don't have to buy random coins. I mean, for me, that's basically giving your money away. You need, I mean, this was basically the entire strategy from the start, but specifically for this late phase of the market, I would recommend that you be specific on choosing which coin you buy, because you are not on the, you don't have enough time to buy a coin. And okay, you say I'm going to sit and watch the coin grow in for the next 3 years. I mean, if that's your approach, I mean, that's a different story. But if you are looking to make money and profit from the current move in Bitcoin, because it did confirm after breaking into new all-time highs that we are starting the next leg, or confirming the next leg to the upside to at least toward 130, then you should be profiting from the altos that will be outperforming Bitcoin, because this will be another move in altcoins like we saw last year, or like so in 2023. You should be taking advantage of this. So the best way is to follow the strongest narrative. I mean, for me, the strongest narrative are still EI, either agent or even RWAI, which is a real world asset. And you can be looking for meme coins. I know meme coins is a whole different sector that not everyone wants to talk about, but we'll be going through a few of them, of course, one by one. Okay, I will be sure, my friend, no problem. I'll be looking also some question in the meantime. So we start with some couple of altcoins. Yeah, I'll be giving you also a top list, a watch list. I'll be uploading the link for you to be seeing these coins. At the same time, I'll be presenting. Let's start by seeing the main coins that could help you identify the right coin to buy, the right structure. So if we go to the, I'll just put the weekly. I'm just going through the previous set to see if the majority asked for many coins, because I'll be covering some of them just briefly. I mean, the main leading coins that we are discussing, I'll just give a brief review. Then I'll go over the main list that we prepared for today's presentation. I'm just looking at the chat also. Okay, I mean, we'll be going over a majority of them, so there is no problem. I don't have an Elliott Wave count for the Bitcoin dominance, but all I wanted to explain for Bitcoin dominance that I still expect, I think I use this chart. If you want just a simple count, I see this as an A, I see this as a B, and I still expect we are within a wave C. So this is just an internal cycle. And even if you go to the short term, you can really start to create the divergence. So I think the cycle could be soon ending with a 5 wave to the upside. This is an impulsive rally, and we could be seeing a correction maybe back toward 50%. I mean, this is, I mean, really best scenario, I think, at this stage. I mean, even a small pullback like this into the 38% could be enough, because I don't think we have enough time for this, because if the peak could be around October, then we have 5 months to go. Of course, it could be a sharp drop like this, but all I'm saying is that we're gonna see a potential drop towards 54 50%, and this could be the reason we're gonna see that the market will be more acceleration and alts. Okay, so let's go over some of these alts. I mean, I'll start by ETH because I know a lot of you are asking ETH. ETH has been underperforming. ETH didn't make new all-time highs, and not everyone is happy about their bags in ETH. However, I want to make an important remark about ETH. You can see ETH is already showing, I mean, similar to Bitcoin, ETH is showing 5 waves from the lows, from all-time lows. I'm just going to use a normal chart to explain the idea. You have one, sorry about this, I'll use this better. 1, 2, 3, 4, 5. So you have 5 swing to the upside. So no matter what you want to see about ETH, it's still a 5-wave advance into new highs. So this is a bull structure. Now what happens after that? This is the story about ETH underperforming, but technically speaking, all it did is a 3-wave pullback. I'll put it in a different color to make it more clear for the explanation. So it did 3 waves pullback, then started this rally. Now this rally, first of all, it's still below the previous peak and it's still holding at the same time 2022. I see there is 2 different scenarios for ETH. If we are going to go with the more aggressive approach like we are seeing or showing in Bitcoin, then yes, Bitcoin is starting a wave 3. So ETH could also be starting a wave 3 here to the upside to finish a 5-wave advance from 2022. This could be a big nest taking place. This was only a wave 1. A larger degree. This is your wave 2. And you are seeing another 1, 2 that could be happening later on. I'll put a different degree just to explain. Another 1, 2. But in this case, Bitcoin could be rallying into the equal X area from all-time lows. Sorry, ETH or Ethereum. And that means if really Ethereum is going to catch with the rest of the market during the alt season, it will be rallying toward 5,000 area, 5,700, 6,000 area. To be honest, we are not seeing yet any big signals that this could be the path. It's possible, but I don't want to rely on something that is underperforming and it's not showing me any bullish sequence yet. So that's why I'll just wait to make this remark, because at this stage of the market, if Bitcoin is entering the bonus time by October, I want to be seeing the leading coins that are showing a bullish sequence. I mean, XRP is even better than Bitcoin. You know, XRP, everyone was angry about XRP in the previous cycle. It didn't manage to make new highs. Could be the same for ETH. Could be similar pattern. What could happen for ETH here is that all it did is going to either skip a cycle or is it still an accumulation phase like XRP did in the previous cycle. And this is only a wave 1. I mean, you could still remain sideways here for a while until the correction happen and even making new lows. But the next cycle will be starting the big wave 3 to the upside, because what happened with XRP here had the first 5 wave to the upside, a pullback in wave 2, and then started accumulating, building a nesting structure here. And then you had the explosion into new high. So for me, if you are looking to trade in the short term move higher, this one has a higher probability. The reason why this is showing a higher probability, because you are seeing 3 waves into new all-time highs. 3 waves is into new all-time highs is an incomplete sequence, because you don't see 3 waves. I mean, the market doesn't move in 3 into new highs. It will be finishing later on a 5-wave advance. This is an incomplete sequence. And most importantly, from all-time lows, it's 3 swings into new highs. And even the cycle from 2020, which is still in progress compared to the rest of the market, is showing 3 waves. So technically speaking, you are missing at least a 5th wave to the upside within the cycle. So if you are looking to trade the big 5 or the big 10 cryptocurrency, you can expect this to still move into new all-time highs with a higher probability to catch up with Bitcoin and we could be seeing 3.8, 4.5 to the upside. This is definitely on the table. No, I know a lot of people don't like the comment about ETH, but the technical structure, I go to the short term. It did 3 ways pullback. If you bought this at the lows, then you are good hand. I mean, this was technically speaking, could have been the big flat, or even just a simple 5-wave advance. I'm not sure if this was really the new marginal high. Yes, this was new marginal high. So you can count this 5 or even a flat. But the most important thing, you don't have a bullish sequence yet. You don't have new all-time highs. ETH could be just doing something similar to this, while Bitcoin finished the cycle higher, then ETH could drop. Keep this in mind. We saw this happen with XRP before. I'm not saying it's going to be the same, but I'm giving you why it's important to follow the estimate with the bullish sequence, because they will always give you edge. You see what happened with XRP here? It bounced, the bounce failed, and then it dropped. Stayed sideways before the next cycle. Could this happen with ETH? I don't know, but I would be avoiding ETH. For example, I would rather trade XRP or even BNB rather than trading ETH. Why is that? BNB is one of the most bullish coins in the market, which is one of the oldest compared to the newest one, and it's still, look at the cycle, it keeps creating higher highs, new all-time highs, lower highs, lower highs. So this is a bullish sequence taking place. We are seeing that it keeps creating higher highs every time, and most importantly, we do have an incomplete sequence. We are only seeing 3 swings into new highs, similar to XRP, but this is even better because we have a target to the upside around 876. We still didn't reach that target, and as long as this cycle is holding, most importantly about 2024, but we are moving on with the time frame. So as long as the recent low from 2025 are holding above 500, then BNB should be extending higher, should be trading toward 876, even 1000, and most importantly, it's still only showing 3 swings. Even at reaching this target, it's still bullish, because the next cycle for BNB, when this cycle ends from 2022, we'll be having 5 waves. There will be another pullback. What will happen after this pullback? The market again will rally again. So the structure is in BNB is one of the most important one to follow, because it's giving you an altcoin which is rarely seen, because as you know, 90% of the coins goes to zero. It's been now 8 years with BNB. It keeps trading higher. Trend is your friend. As long as it keeps trading higher, creating this incomplete sequence, all you have to do is follow the trend, find the next buying opportunity, and you buy. Now in the short term, I'll talk about how to identify these short-term opportunities, but I want to talk about the overall bullish estimate that give you this type of structure. XRP is one of them. BNB, these are the biggest coin. Even Tron did manage to make new all-time highs, and it's also I think 3 waves. I don't know if it's going to make new highs this cycle again, because after this big spike, it could just retest the peak and do pullback later on next year. But what you know at this stage is that this next pullback is a buying opportunity, because Tron will end up in the next cycle making new all-time highs. It's showing an incomplete sequence or only 3 waves to the upside. We saw this happen before in BNB, and we are seeing this happen again. XRP, the same idea. It's 3 waves into new highs. It's a bullish. Now, starting to move on onto the watch list one by one, but yeah, sure. I mean, if the dominance drop, that will be boosting coins, but remember, I don't think every altcoin would be giving you an edge. So one of the favorite at this stage that I see that still have potential is Sui. There is a lot of talk Sui, specifically, I think yesterday, I think there was a DEX on Sui that was a good hack, but we don't care about this. You know the risk of crypto. You read the disclaimer, everyone knows that any coin at this stage can go to zero. So we are not recommending that you go buy BNB or XRP or any coin. We're explaining the structure of the market, how to identify the bullish structure, which will help you for trading or investment. So we need to be aware of that. So for now, I can see for SUI that is still showing 3 swings into new highs. I mean, this one, of course, it extended into the target, but that's totally normal. Could have been a pick in place, yes, but the structure is still creating higher lows after the recent pullback in April. And most importantly, I'm seeing that the recent peak came with no divergence, which suggests that this is still could be 1, 2, 3, 4, and a 5. I mean, this is a less aggressive. A more aggressive view, this could be even nesting. If Bitcoin is nesting, this could be 1, 2, 1, 2, and acceleration high. But I'm not going to go with a more aggressive view at this stage because I know we are entering the final phase in the market within 5-6 months. This could be soon ending, but a minimum target for SUI will be around 6.2, 7.6. If it's going to be wave 5, then that's your inverted target to the upside based on this wave 4 pullback. If this is really 1, 2, 3, 4, and 5, I'll change this into a more clear color so you can see it. If this is a 5-wave advance, then you can still see a move higher. What is really important for SUI here in the short term is that if you go now to the daily chart, what you see here, guys, is 1, 2, 3, 4, 5 swing to the upside. So the enhancement did finish this correction for sure, and now it is showing a 5-wave advance. So this is telling you that at least what will happen here, a pullback and another 5. Could the 5 break the previous week or hold below it? We don't know, but we know that another 5 wave similar to this will happen. And based on this projection retesting the peak, I think this will be a good trading opportunity for you. If you go to the short term, which I'll show in a moment, I'm just giving an example how this setup take place. This is SUI. This could be a live example showing how the market works because the pullback is happened today. Now, if we count this as, I can count this as WXY or even an ABC, but this big overlap. But let's keep it simple for explanation purpose. If this is a 3 swings to the downside, then you can expect SUI to present a buying opportunity. The reason this could be a good opportunity because first of all, the weekly is still bullish, new all-time highs, then 3 waves pullback, creating a higher low, and most importantly, we are seeing 1, 2, 3, 4, 5 waves to the upside. You can see the divergence here. The third wave came with no divergence, the highest RSI momentum. This is the typical extension that we talked about it earlier, the wave 3 of 3, and then a 3 waves pullback taking place. Now this is 3 waves pullback. What could the market do? Reach the buying area around 3.48, $3. Either could resume a rally from here or could fail and do 7 swing structure. Then rally again because you need to combine where the market is, where Bitcoin is Bitcoin around an extreme area like happened in April. Why the reason why the majority of alts rallied in April despite not reaching maybe their extreme, because Bitcoin was sitting at equal X. Then Bitcoin started the rally, the majority followed. But the first to identify is that you have a 5 waves. You see the first rally was on 5, pullback, another 5, a pullback, another 5. So this is a typical Elliott Wave structure that you see around the market. So that's why I'm saying one of the good structure that you could be watching is SUI. We can combine the 50% with the equal X area, for example, and at this stage you say, okay, this is a potential buying opportunity. Let's identify the area. The area is between $3, $3.48 to $3. And I'll be expecting this to resume the rally and to new all-time highs. What's my daily target? Which I showed earlier, which was around, let's just put it quickly back here. It was around 6.2. So if you are buying around 3.3, looking for $6, it's almost a 2x move. That's really good. I mean, you don't even need to use leverage. This is a good almost 2-to-1 risk reward without a leverage. You can diminish the return to protect your position, but it's always best to protect your capital there rather than risking too much. Yeah, I'll definitely check Vishay, but I don't think this is going to be a good example. But yeah, I will keep giving you some of the best coins. But I mean, we have a lot to discuss. Not every announcement, we can't discuss every altcoins here because the list is endless. But I'll go over them really quickly. Now, the way I explain this is to give you an idea why I'm putting this in the watch list, which I'll provide the link in a moment to help you out. This will be, I'll put this in the chat room in a second. Okay, this will be the watch list. You can check it later on. I'll explain few of them, but the reason I'm putting all these announcements in the watch list because they have a potential of either a bullish sequence or a bullish structure. I'll just go over a few of them before we go to the top list and finish with the Q&A because we are already running out of time. So let's move on to the next one. This is another one coming from the SUI ecosystem, which is deep. Now, the reason I'm putting this is similar to the rest. It was an impulsive rally when it started last year, a pullback similar to SUI, and now there is an impulsive 5-wave advance from the low. This is really important. You have a 5-wave advance. You still didn't create a bullish sequence technically because you still didn't manage to make new all-times. This is a new coin. But when you have a 5-wave advance, that gives you a better perspective than, I mean, if I show you one of the weakest coin, it's still trading basically here. I mean, I don't have a live example, but we'll check a few later on. But the majority are still lagging. The leading coins are already showing this type of extension with a clear 5-wave advance. That gives you an example because at this stage, let me just switch it to a less one. So when you have this type of structure, you can put a potential buying opportunity for you if the market provide a 3-wave pullback. It's not one of the most bullish scenarios you can see the market, but if the market provide a good buying opportunity, it's based on the 5-wave advance. You can be trading against April low, and this is one of the announcements that you could be adding to your watch list. Of course, the moment it breaks the previous peak from April, now in that case you have a bullish sequence, and even in the short term, and you can expect a new all-time highs to take place because this will be opening further upside toward 0.36, 0.49. So this is one of the announcements that is showing clear structure. You can be watching. Another one that recently made new highs. This is one of the high risk. I just want to give 3 different coins, one from last year, one from earlier last year, one from late last year, and one from 2025 within the same ecosystem because they are playing the leveraged game. If you don't want to trade SUI because you think this is too big and won't give you enough big risk reward, then you can move to a higher risk reward coin. That's up to you, of course, which is playing the same ecosystem. That's one of the strategies that you can be using. And this one, if we can use the target from the equal X area of on-time lows, you can be expecting a move higher towards 0.6 if you are looking for, if this was your wave 1, you are looking for the start of a wave 3. So technically speaking, you can expect this to rally toward at least 0.6. So compared to the SUI, this is a better opportunity. You can use it instead of buying SUI. Another one, which is a different structure, but more bullish, is Hidal. I don't want to talk about any fundamentals at this stage. I don't know anything about these coins in terms of the owners, or I mean, that's up to you to do your own research before trading any coin or buying. I'm just talking about technical structure. You see here, after the first 5-wave advance, it started within a sideways range, but most importantly, what happened in the recent 2 days, it broke into new highs. What we are seeing here, from May low, we have 1, 2, 3 swings. When you have 3 swings to the upside, either this could be part of a flat, which means a pullback, then higher again, or this is a nesting structure, 1, 2, 1, 2, and it will rally again. It's going to be the same end result. An incomplete sequence will give you higher move. In this case, it should take the enhancement higher toward 0.24, 0.33. So this is another example of a bullish sequence that you could be relying on the short term. Now, if you move to different type of enhancement, let's move to a bigger enhancement like Caspa. This is a perfect example how the cycle could mature for any enhancement. I'm not putting Caspa in the watch list because it's going to make a new all-time highs or rally 10x, but the Caspa structure is something that you always need to keep an eye on it, because you see from all-time lows, we started in 2022 basically, you are seeing a 5-wave advance taking place. This is really important because the moment the cycle ended, which we talked about it, I mean, I'm talking about these type of coins every day, but the moment it ended the 5-wave advance, you saw a big 3-wave pullback. Why Caspa is important? Because after 3-wave pullback, similar to Bitcoin, this was even a bigger correction from July 2024, a bigger weekly correction. It found buyers right on the equal X area, which was technically speaking a weekly buying opportunity. Now, traders or investors who bought Caspa here, they are already enjoying the bounce. However, it's not yet confirming that it will break to new all-time highs. It could be just a 3-wave bounce, for example, could be finishing a 5-wave up, a pullback, another 5-wave up, still phase below the peak and do a bigger correction. But most importantly, you know that from these lows, you expect Caspa to bounce. That's a live example how you can be using the blue box strategy, identifying the impulse of 5-wave advance, waiting for 3-wave pullback, and you buy. This was a good buying opportunity all over the market. Many enhancements like this presented this. One of the most enhancements that I've been watching here closely is going to be, which also in the top coin list, is Hyperliquid. Now this one is a perfect example how you can apply the strategy. I'll be showing, I mean, this chart is just showing the blue box area, but I want to show the main chart, which shows the all-time lows. Okay, there you go. Because you had a 5-wave advance in the first cycle. We can see clearly here 1, 2, 3, 4, 5. This was the peak of the cycle. And from there, I go back to this chart. It showed a 3-wave pullback and to the blue box area. I mean, I've been sharing this live on X since it broke these lows. It was really one of the enhancements that I've been following. The reason why, because first of all, it's one of the newest coin, which why I always saying in the alt season, you should focus on the strongest and newest coin. You can ask why we are not talking about altcoins. As I explained earlier, majority of them fail. I'll show some coins that failed to give you the example why you should be avoiding them, man. So for example, Hyperliquid, after it launched, yes, you can make the question, it dropped 72%, why I should be buying this. This is just a purely technical trade. I don't care what's happening with it. Of course, it can go to zero, but technically speaking, it was a 5-wave advance. It was a technical 3-wave pullback. Then I will definitely buy it. So what happens here? It reached the buying area around 11 to $11, $7. And from there, you can see clearly this managed to rally specifically today. It helped us before the presentation. It made to manage to make new all-time highs. It's already 300% to the upside. Now, what I want to mention here is the 3rd wave extension. Now, this is really important. If you remember the slide, which I showed you earlier, I'll show it back here. This is the common mistake that everyone... Let me go back to the slide with the 3rd wave extension. If you remember this one, this is the one... There you go. You see this one, the 3rd wave extension? I said this is the most common mistake that people tend to fall in when you see this move. So you bought the blue box area. If you didn't buy the blue box area, you are waiting for the first 5 waves to happen, like this, and you say, okay, the market will drop, I'll be selling, or I'll be taking profit, or I'll be looking for short position, then I'll be buying the next pullback. However, what happened? The market was, technically speaking, building a nest, 1 2 1 2 1 2, and then accelerated higher here. Even after that, you say, okay, now you can consider this 1 2 3 4 5. You go again and say this could be, this could be your 1 2 3 4 5, and you are again trying to sell or waiting for the market to pull back to buy lower. What happened? The market or the coin finally explodes higher with the strong wave 3. Even in momentum, you see here, the momentum RSI is at the highest. That shows you that this is the wave 3. So that's why we explained it earlier. Always avoid to sell or trade against the trend, which means if the trend is bullish, don't try to sell it. Always try to avoid assuming that there is 5 waves and the market will drop. Don't try to, maybe, of course, taking profit. I'm not going to go against taking profit, but don't try to assume that the market will give you always a good buying opportunity. Yes, this was a good buying opportunity, but if you missed it, then you should be waiting for the next buying opportunity. However, in this case, the market only gave you small. Maybe if you were a short-term trader, you could be getting these pullbacks in the 1 hour or 4 hour. But technically speaking, what happened? The market resumed the rally and break to new highs. Now, if we go to this chart, now let's explore few targets higher. If this is going to be 1 2, then you have 2 different scenarios. Either the market will be reaching 42 area with the equal X, and this could be another 1 2. So could be reaching this area, a pullback, create another 1 2, and start accelerating higher within wave 3, a wave 4 pullback, and higher again. So this is kind of an exaggerated move to the upside, but technically speaking, that could be the path until, you see here, that's until October, November of this year. Or, I mean, this is kind of a constructive path, but you know, sometimes the market doesn't allow you to get a constructive path. What happened usually, I'm not saying this is going to be the path, but I'm giving you both the constructive path, and the market could just start the wave 3 here like this with more aggressive scenario to finish the wave 3 and do the pullback like this. So this could be why I'm putting an extension above the 618 area. Is just now a presentation of the cycle. I'm not going to say the target will exceed, but usually with this extension in the third cycle, after the first initial move, you see extension beyond the 618 area. That's usually how we identify a wave 3 extension. But of course, the market, all it can just do something similar to this, reach the 618 area and drop from there. Most importantly, you have a bullish sequence above the previous peak, you have new all-time highs. Then as a trader, as an investor, if you didn't buy this earlier in April, then you could be looking for the next pullback in the short term to buy. Okay. Okay, yes, sure, my friend, no problem. I mean, we are running out of time. I'll finish with the main coin, then I'll take the question. I'm seeing a lot of question here about the other alts. So this is one of the coins, so I'm putting in the tier list that we are presenting, that you should be taking a look at. I'm not saying you should be buying or straight buying. This already moved 4x from the lows or 3x from the lows. I'm not going to jump and buy this. I'm just showing you the highest probability altcoins that already made the new highs, or they have a bullish sequence. K2 is one of them. You can see it already from the lows. It's showing 5 waves up. I mean, this is not the clearest because this is not showing the start, but the first leg is here. It was similar to Hyper in the first. It was 5 waves up, a big pullback. This was also a technical correction, which was, technically speaking, at equal legs. This was also a good buying opportunity. You see again the blue box area. What happened? The market find buyers, and what we have here, 1 2 3 4 5 swings. Now I'm saying five swings, not 5 waves, because this is same what happened with hyper. You had 1, 2, 3, 4, 5 swings. Now, if I want to call the 5 waves and a 3 waves pullback, you could be ending in the same mistake. What you need at this stage is identifying 5 swings, so you know that you have 2 possible paths. If this is going to be a regular impulse, then yeah, this could pull back like this, give you a good buying opportunity again against the lows of April, then it should rally. However, if the market is going to do something similar to hyper with a nesting structure, then it could hold the lows that we saw last week or earlier this week on the 18th of May, and it could see further acceleration from here. So you have 2 potential paths. You need, if you are looking to trade the coin, then you need to build your plan based on this. There is nothing else that you can do at this stage. You can't be just running and buying coins left and right. You need to identify this type of structure at this stage. If you have a 5-wave advance, then you know that the market will continue either after 3 waves pullback or even with a nest. These are the leading coins that already created significant separation from the lows. I mean, if we count here from the exact lows, we are already up 200%. So that's a good structure to follow. I will show just the final 2 examples, then we move on to the Q&A session, because I don't think we have enough time. We are already almost 2 hours in the session. I'll take the question for sure. Yeah, no problem. Okay, so this is another example. You should, if you ignore the fact that we have the spike, because we can use the different chart, but that's spike when you have the launch in the coin, which we most of the time ignore. But most importantly, this is creating higher high sequence from the lows, made new highs, and you can see we are starting to see the acceleration with the RSI. This is still trading higher within a nesting structure, and you can see here it started 1, 2, another 1, 2, another 1 and 2, even here in the short term, even another 1 and 2, and finally we are seeing, you see this is a multiple nest. We can see even this is a triple nest, but you see this contractive structure was building this the nest before final breakout above the previous peak, and you see the acceleration. So this is one of the bullish structure that you should watch in the market, like we are seeing with subsquid here. And this instrument should remain bullish. You can be looking to buy the pullbacks in the short term, but this type of structure is all you need in the short term. I mean, I'm adding a final example here with SPX 6900. I know it's a meme coin to the stock market, specifically to the S&P, but what I really like about the structure is that this is showing a 5-wave advance into new highs. I'll go even to the daily to show it more clear. 1, 2, 3, 4, 5 swings. This could have been a leading diagonal, which was one of the structure because it's an overlapping structure. But most importantly, it's a 5 swing into new highs. Now, what I like about the structure here is that it's still contractive. It's still kind of nesting, building the start of the nest. So you have the potential, as long as it stays above March low, and more importantly, you can go further against April low, which is the low for Bitcoin. Then this could be another nesting structure, which is still didn't rally and break into new highs, but this is the start of the rally. 1, 2. So I'll put 1, 2, another 1, 2, 1, 2. So this is a multiple nest taking place, and we could be on the verge of breaking higher. The best strategy, as always, is to identify the structure, then look for, because even in the short term is showing you higher high sequence, and you can see clearly the 5-wave advance. For example, in the short term, this is a clear 1, 2, 3, 4, 5 and to new highs. So the best strategy at this stage, you take the recent low, which is the 17 May. If the market provides a clear 3 waves pullback, then this could be a good buying opportunity against the recent lows 62. You could be end up, for example, if you are a swing trader, you could be even end up catching the wave 3 of the cycle. I mean, if if we still didn't see this as an impulsive structure, even if we are just going to see another leg higher, this could take it toward $2, and extension, if it's going to be a wave 3, that will be at least reaching 3.1. We can even talk about higher targets, but that's not the idea. The idea is that you identify the short-term structure that either is going to be preparing a nest or a 5-wave advance, and if you have the previous cycle showing a 5-wave advance, then this could be the start of a wave 3 for the cycle with the alt season heating up. Then you could be catching one of the good moves at this stage. I mean, it's not easy, of course. It's not easy to trade. I'm not suggesting to trade every move. It's better to buy. I mean, if you are a short-term trader and you bought the blue box, you could be taking profit. But as an investor or swing trader, all you had to do is wait for 3-ways pullback in K2 or on Hype or even in SPA or on every other coin during this pullback. Bitcoin was at the equal legs. You combine. I'll go to short-term to show it again. You need always a combination. Okay, let's show the daily really quickly. If that's the case, yeah, I'll be checking for sure. I mean, if there is a potential nest, I'll check it. I'll finish this with this session, then I'll go. So this was the connector. Let me just switch this color to make it more clear. So you see Bitcoin was trading at equal legs area. So you know at this stage, you should be expecting the market to bounce. So when the market at equal legs area like Bitcoin, you look for alts that showing clear structure like this one, 3 waves from the peak and to blue box area. Now, sure, that's good. Now, I will be showing this. I know this is a meme coin again, but I'm showing the structure, which is really good because this is an educational webinar, which help you identify the best structure for trading or for investing. Now, the structure for Factcoin from the lows, I don't know. It was a massive rally. I'm not going to talk about the past and what happened with meme coins, but this was a 5-wave advance. Good structure to the upside. It did a pullback. Most importantly, it did a higher low. It didn't break the lows. And now you can see, you see this pattern? Of course, I showed you earlier. It's basically the same here. The same what we are seeing in every market when it starts building the move to the upside. What is happening here? It's building a nest, and we are still not seeing yet the 3rd wave extension. I mean, you start counting 1, 2, 3, 4, 5. And what happens here? Majority, say, okay, let's start selling. The market continue higher. Okay, they try to find another 5-wave advance. Okay, this is another 5. Let's start selling. Yeah, you get small pullbacks, but the market is tricky. It will just give you small pullbacks, shallow pullbacks, and then extend higher. I don't know if this is going to be the 3rd wave extension from here, but all I'm saying, this is showing a nesting type of structure. And if the market is going to rally, there will always 2 paths. Either it's going to end a 3-ways pullback. It will be a gift for you to get 3-ways pullback against the lows from March or April. If the market is nesting, then it will be just straight up with shallow pullbacks. However, you see the end, you have the same end result. This is more aggressive approach. This is a less aggressive approach. It's up to you to decide how to take these. Most importantly, you don't need to force any trade. If this is going to extend and break higher, you can expect $3, $4, or even higher. I mean, I can give some targets really quickly. I don't see the potential of every coin based on the sequence, but the targets are minimum at this stage. So yeah, if we are going to start a wave 3, we can be looking for 4.5 and even higher targets. This could be just the start of a wave 3, and it could take it higher even later on with more extension, but that's up to the market to decide later on. Okay, I think as we are running out of time, we need to make a conclusion and move quickly to the Q&A session. I have a lot of pending questions here. Okay, let's go back to the really quickly to the presentation. Don't worry, I'll take a look at all the question. Okay, so just to make a quick recap here before we move to the Q&A session. Remember, the key points to take that Bitcoin is bullish in all time frames. We have a bullish sequence. We have confirmed new all-time highs, specifically this week and the recent 2 days. So the best approach at this stage for Bitcoin in particular is to buy the pullbacks in 3, 7, or 11 swings against the recent April low. I'll go to the chart again to show you. I'll delete all the labels and everything. I'll just explain it purely technical. You have a low coming from April, which is this. This is technically speaking your validation level. You did manage to make a new all-time highs. So you have a bullish sequence. Now, how Bitcoin could be approached at this stage? Of course, I don't know if this is going to be a 5-wave. Okay, I need to change the color 1 second. I don't know if Bitcoin is going to be following a regular impulsive move. It's going to be an extension with a 3rd wave extension. All you understand at this stage, if Bitcoin provides you a 3 waves pullback against April low, you take that long. Why? Because we have an incomplete bullish sequence on the daily from August 2024, and this cycle is calling for 134 at least. So you know that 134, let me put this in different color. You know that 134 will be reached. That's the minimum target. So you know that you should be, I'm not saying this is going to be the pullback. I'm just giving an example. If you see 3 waves pullback, you can buy it looking for the next move high. Of course, the pullback could remain shallow. We saw this before. You don't need to have too much pullback. This could just extend within shallow pullbacks and then reach this area before finishing the cycle and doing a 3 waves pullback to correct April cycle. So we need to go even to the short term. We provide all these type of structure and idea. I'll explain it in our website, of course. So let's continue with the conclusion. I'll still take the question for sure. We still expect, as I explained, BTC to reach 134, as I mentioned, as I showed you, which is the main target for the cycle from August 2024. And we still can expect if we are going to be nesting with a target toward 168. However, if the cycle extends in price and time, we're going to see the peak not happening in around October 2025. We can still, for example, see that S&P opening a bullish sequence higher. We still expect, for example, the dollar not yet reaching the equal legs. Then, yeah, we could extend beyond maybe 200 or even reach 200 in 2026. And this is still a low probability scenario, but let's keep that in mind. Now, for me, if Bitcoin is already at 130 or 160, 150 around October 2025, and I see that the dollar is at equal legs area, for me, that's a big warning sign, and you should be looking to take profit. I mean, at least that's my strategy that I'll be using, because I know how the market works specifically in this type of situation. I saw this happen in 2021. It did the same. We took profit, and that it's better to keep, I mean, to protect your gains, protect your capital, and you don't need to be greedy. No one needs to pick the top. You don't need to have the exact peak. You just need to keep taking profit in strategic area with technical targets. Okay, and finally, of course, the altcoins, as we showed, will be seeing a final rally during the summer, I believe. As I mentioned, the strongest and the newest, like I showed you, for example, like Hype or like K2 or any new coins that have a bullish sequence or strong impulsive structure should be breaking into new all-time highs. So majority of the rest, I think, will be stalling. They won't be making new all-time highs. I mean, just a quick example, I mean, that I showed earlier is going to be, I think, we can use, for example, one of the altcoins is Litecoin. I mean, just another simple example here. Let's use I just want to give an example of coins that could be lagging. You have many examples, but I mean, we don't have the time to go all over these coins. You see, the previous cycle, what happened here? We are only seeing 3-wave structure, and we are far from breaking all-time highs. So this is, for me, not a bullish sequence, of course. It's only 3. And I mean, the most bullish case scenario for Litecoin, for example, yes, it could make a new high this cycle, but definitely not a new all-time highs. It could make a new highs, and this could be similar to XRP, building up maybe for the next cycle, the following cycle. Because at this stage, it's 3 up, and if it managed to make a new high, that would be 5 waves from 2022. It will correct with the rest of the market during the bear market, and then maybe the next cycle will be when this one will accelerate. So that's why I'm avoiding this type of coin that only showing 3 waves, not even breaking the previous peak. I just want to show a quick example of failed coins. Let's take an example for example, Matic was one of the big coins or hyped coins in the previous cycle. This one, you see the structure? After the previous peak, there is a debate this could be a 5 or 3. But the most important thing here is that while the rest of the market was making new all-time highs, Matic or Polygon was doing 3-wave bounce only. 3-wave bounce failed, another 3-wave bounce and failed, made even new lows below 2022, and again it keeps creating lower lows. So this is an announcement, for example, you can avoid. You don't look to trade, you look to invest, because it keeps creating lower highs and lower lows. You can still see on the social media still people calling for new all-time highs from here. Anything is possible, but technically speaking, this is going to zero in terms of managing to keep breaking into lower lows or making lower highs. Sure, that's another one I will be checking. Okay, so let's go into the Q&A session. I'll be checking the question really quickly. I don't have, I mean, we are already past the time, but yeah, I will. Sure, my friend, that's another coin that we could be checking. I have a lot of requests here, but I'll try to keep it quick and fair for everyone. Okay, so I'll start from, because I saw there was a question about VeChain could be nesting. I mean, VeChain, to be honest with you, this is similar to, I'm not going to say to Matic, but similar to Litecoin. It's an altcoin. I mean, VeChain was huge in 2021. Definitely. Not going to talk about the gains there, and everyone knows. I mean, anyone was in 2021 bull market. If you did accumulate in 2020, all these type of coins did give you massive gains. But now you can see we've been sideways. You can make the argument, yeah, this is still another accumulation. But remember, I'm always keeping the aspect of the 4-year cycle for Bitcoin, which is ending for me, or for the cycle, not for me, but I consider this really important, in October 2025. Do you think that that until we reach to the rest of the 2025, that VeChain could be making all-time highs? That's up to you. I'm seeing that this is making higher lows, and again, this one is still a higher low. For me, this could be just maybe doing 3-wave bounce and failing again. I don't favor this type of investment, so I just want to show to answer your question, but I think this question, yeah, if I show, okay, let's see in the short term, you say could be nesting. For now, could be nesting because it keeps making high lows, but I only see 3 swings up for now. It's lagging compared to the rest of the market, that's for sure. It didn't even reach equal legs, and most importantly, this is, you see the recent move, it broke below November 2024. I mean, it's the structure is weak, so I'll try to avoid this type of announcement. I mean, if I were you, I'll try to look for other announcement that are showing at least a bullish sequence. I mean, if it's nesting, yeah. I mean, if this is going to be, for example, 1, 2, 1, 2, then it needs to hold these lows for sure and keep nesting like this, then accelerate higher, then yeah. But even that, I don't think it's going to trade back into new all-time highs. I mean, the best that you can get similar to Litecoin is that this is going to make a new marginal high, then top again. Maybe this is a good move for you, and that's up to you. Okay, let's see the recent question about, okay, so Mara and Riot are stocks related to crypto. I'll check them in a moment. I'm just looking at the previous. So there was a question about ING. Yeah, this is really important. ING is one of the leading coins it was one of the leading coins back until last year. I have it here on my list because I'm watching these type of coins regularly, but I already prepared this for you. ING or Injective already down 88%. When I say 88%, I mean cycle is done. You have nothing to do. I know we can talk about how the cycle could be extending and everything, but for me, for now, you see the previous cycle, 5 wave up, 3 waves pullback, 95%. This one did exactly the same. If 5 wave advance, I just going to show you quickly. You are welcome, Bubble, for the question. I think I answered your question, of course. So this was a 5 wave advance. And again, this is 3 waves pullback. I'm not saying this will be running from here. I'm not saying the correction is done. I mean, we could be even seeing majority of the coins always drop 90% after the cycle. We could be still seeing more loss. I don't think it will happen from here. But my point is that I think the cycle is done. Is Injective bullish? And the monthly, yearly is still bullish. Why? Because it's still showing 3 swings into new highs. So the monthly and weekly, the overall picture is still bullish. Do I think this is going to make a new all-time highs from current lows into the cycle by the end of 2025 or next year? I doubt it, because if you are going to see this as a bullish, this is 1, 2, 3, 4. You expect in a 5 waves. I don't think this will happen from here. I think this is another cycle building into a nest, like Bitcoin did in the early years. This could be your 1, 2, 1, 2, and this is still in the correction phase. The bounce will fail again. You get another low into the bear market. Could be short term of accumulation phase. And then I'm just putting something similar to this. And then the next cycle could be even bigger one. I mean, this goes more with the idea that the next altcoin season will be better than the previous two. Why I'm saying this, or at least from the previous one or the current one. If I go back to the chart of Bitcoin dominance, because I expect the big drop for Bitcoin dominance to happen in 2018, 2019, when Bitcoin dominance reached the 77, 86%. I believe this will happen in the coming 4 years. When this will be reached, a big correction will happen. Something similar to this, something similar to this. And then you can expect, I don't know what will happen in the 4 years, but maybe the Bitcoin will be more stable because institution or big events. I don't know exactly. I don't want to forecast the future in terms of fundamental, but whatever happens here means that Bitcoin, of course, will continue to be bullish, will trade higher above 200, 300, 500. I don't know exactly the target, but when Bitcoin trade higher, I think the altcoins will outpace him in the next cycle. So this could be reflected, sorry about that. This could be reflected in Injector, for example. In the next cycle, you could be seeing this happens as a wave 3. This is 1, 2, 1, 2, and you see the strongest wave 3 taking place. But I don't think it will happen this cycle. I hope that was clear. Okay, I'm going just through other coins. Okay, we went through XRP cycle. Of course, you can drop any coins now, but I'll just try to keep it short in time. Okay, so let's see Render, one of the leading EI coins at this stage. This one, similar to the rest of the market, I see still a bullish sequence, similar to the previous one. It's 3 swings into new highs. This is not a 5, which means the monthly is bullish. The monthly chart is bullish. Does it mean that we're gonna rally from here? Technically speaking, I don't think so, because all I'm seeing, I know there is an argument against this, I'll talk about in a second, but I see a lower low sequence from the peak after we took the July 2024, but that doesn't mean the market can't rally, because this could be just an ABC. I favor that we didn't take the lows, like many estimates that managed to hold the lows from July or August 2024. And if we did finish sideways pullback, you can make the argument that this could be your wave 5 taking place here. However, it needs further acceleration, further impulsive structure to show that there is a chance of making new highs. If that's the case, then yes, you can expect this to rally towards 1620. Is this the most probable scenario or the best coin to look for this move? Probably not. But yeah, in terms of the short-term structure, I still don't see the big momentum, like for example that we saw here. If we go back to hype, for example, do I have the chart here? Okay, I'll just type it. Oh, okay, I can show it here. It's better to keep our chart. See here? See this momentum? That's starting to see and even make new highs. We are not seeing that type of momentum yet. So yeah, this is not really the best example, but yeah, in the short term, as long as you are holding above April low, in this case, the 7th of April, then yes, this is looking good. You could start building a bullish sequence or bullish structure, and then you can aim for new highs. Sure, I'll check Tailcoin in a moment. I'm just, because you already answered your question about VET, so to give everyone a chance. So I see a question about ICP, and I see another question about, yeah, ICP is one of the coins that we added on the watch list. Let me go to the webinar watch list, which I provided to you. I think I have it here, if I'm correct. Okay, no. Okay, this is ICE. No, I thought you were asking about ICE. Okay, you are asking about ICP, but this is one of the answers that I think ICP, the structure is not is not in your favor, but let's see. Yeah, as explained, I mean, you see here that I already have my charts drawing an equal legs area, but yeah, it's sitting within a bouncing area. Let's be clear about that. I mean, I think this was based on the previous cycle, but yeah, let's just review that. You see here, I know the big drop, we don't want to talk about it. I know what happened with ICP with the launch in 2021, but let's talk about that. Let's talk about the current cycle. So where is the low from current cycle? It's, I mean, this is the late low. This is already a weak sign, because majority of the market made the low either in July or June 2022 with the ETH, or in November, December 2022. This one did manage to make new lows in 2023, while the rest of the market was already starting the next leg higher. So this one did finally manage to catch showing an impulse of 5 waves. So I can give it the benefit of the doubt, but for me, this is 3 waves pullback. I can make the case that this could rally like this, but I don't think it's going to make any new time highs anytime soon, for sure. The most bullish scenario for ICP is it can just do a similar rally to what we saw last year, a strong rally. That could be the best case scenario to rally to 22, 26. However, as long as we are trading below this, I'll keep it in a different color. As long as we are trading below this channel or trend line, you can expect this to fail and 3-wave bounce. Then the market could make new lows again. I don't want to try to be negative about the market, but I react based on the technical structure. If you give me a different, I'll give you a different, for example, that is a better estimate that you can be looking to trade, and not even method. Let's take a look. For example, I saw a question about pendle, right? I think, yeah. And even here, okay, this one is better. Why is better? Because first of all, it created a higher high sequence, new all-time highs. did sideways pullback, and most importantly, it managed to hold the recent low. It retested the lows, bouncing from there. Even it's not the most bullish scenario, but I can see that this was a sideways pullback into equal X area from this peak. And the buyers did show up. Yeah, it didn't manage to make any all-time highs in the last rally in December, but it's still holding the structure. So if I want to be bullish, I would rather be in pendle rather than trading ICP, because this has a higher probability of going toward 9 or even 13 rather than trading ICP toward I think 22, the target that we saw. I mean, even the structure from the lows is better in terms of, you see, we have been rallying since March, even better, because we didn't manage to make new lows in April. So the short term is showing strong structure since March, and for now, it's still kind of building the impulsive structure from the lows. Nothing is clear here because it's let's say it's overlapping structure from the lows, but that's the start of a nest. If that's the case, then yeah, you can be breaking into new highs. You're welcome, no problem. Okay, let's see another question here. Okay, I'm really running out of time, but yeah, we can do this another time, but specifically we can do another session maybe another day for specifically altcoins, but I'll try to wrap up with these final questions. Okay, because remember, I'll still have a gift for you. It will be presented by the end of the session, and we have a promotion going on, so I'll give you that explanation in a moment. So let's finish by taking a look at Telcoin. Oh, sorry. Yeah, I have already this, of course. I've been watching this. I think it managed to fail because the structure was looking good earlier this year, but the recent drop kind of changed the momentum for me, because I was looking for this to hold early lows from February, but this recent drop kind of changing the structure. It's still overlapping. I still see a potential 1-2-1-2, but to be honest with you, I really don't like the structure creating. What I mean here is, you see, you had, this was higher highs, this was higher lows, and all of a sudden I'm seeing now lower lows. Instead of higher lows, it managed to make a new lower low. So that gives me the impression that this could be just a three-way bounce. I'm seeing 5, so the market could be, this could be just 5 wave in A. You are doing a wave B, a wave C, and the market could drop. Even it could be just dropping from here as we speak, but this is not the best structure that we are watching. I won't be looking to trade, for example, or invest in this one based on the fact that it's looking to be a 5-wave decline. The bounce could fail, and we could be seeing later on lows. So this is not my first option when coming into altcoins. I mean, if you want to see altcoins, I'll just give an example. I'm not going to, I know the market could tremendously rally. I give an example from 2021, which I'll always use, which is Axie Infinity. You know, the game, when the gaming narrative kicked on, everyone was amazed by Axie Infinity. I'll just put the look chart to show you the percentage. Now, the drop that happened on April of 2021 was, was I think almost 70%. Yeah, 77%. That's why many people are the argument is that, yeah, doesn't matter you dropped 70%, you can make new all-time highs or rally and make 20x, because after that 70%, you can see that Axie did manage to rally 6,000%, which is basically a 60x rally. However, this wasn't the big rally, because the first rally, even it looks small on the chart, but technically speaking, the first rally was the best because it did manage to make 11,000%. But that's not the point. The case is that when you are seeing these type of gains, even after 70% drop, which why I'm seeing a lot of people seeing big coins dropping, like we saw with, for example, ING, you can make the case that, yeah, we dropped 70%, why not making it back to on your time highs from here? It's possible. The market could definitely rally, but it depends on the narrative. That's why I showed you this chart earlier, because the narrative have changed. Why Axie Infinity rallied in 2021? Simply because the narrative during that period of time was about gaming and NFT. Many DeFi coins never managed to make new highs above the previous April peak. Many coins failed to do this type of rally. Many coins just sit here playing sideways games while this stuff. So this is really important. Why to identify? Even you see your coin drop at 70%, and you see even for now, Infinity is trading within the lows. There is nothing about gaming that is picking up. Even I love gaming and I love the gaming coin, but they are not picking up in the piece like we are seeing, for example, for you see here for EI agent or meme coins. In the recent month or the recent 2 or 3 months, these are the one leading the market. So if I want to focus on choosing the right coins for the alt season, specifically starting with April low and coming forward into this May move, all you have is to focus on the data. The narrative that is focused, of course, the narrative could shift in 2 or 3 months. We could see seeing another narrative, even next month. But you need to focus on these to identify which aspect. That's why I put here in the watch list I gave you. For me, majority are EI, or you have some meme coins here that we can talk about, but we don't have enough time. But these are related to EI, like Kato, for example, or even Subsquid. SMP is just SPX, sorry, 6900 is just another meme coin, but it captured the idea that these are the one leading the move in the short term. So I'm not going to try to fight the data. Okay, so I think that was for the questions. I think overall, yeah, I think the market here is going to give you a lot of good buying opportunity. So I want to just thanks everyone for watching. Before you finish, I want everyone to know that we do cover a lot of instruments, 78 instruments. We cover cryptocurrency, including Bitcoin, ETH, XRP, Sol, BNB, and Doge. We have currently, you can always start the 14-day trial, but we currently have a good promotion that started just today. You can take a look at it at the website, which is going to be, one second here, which is just going to be for new members. We are launching for 480% off for Memorial Day for them limited time only. I mean, you can always join the service. You can always check whatever we have here in terms of subscription. We have different type of services. I want to mention that specifically for the one attending live, we have a special gift for you. If you are going to, which will be only available for 24 hours, so make sure to take advantage. We are going to give you a discount code that I will drop in the chat room shortly. This will be an extra 10% discount applied to the current promotion. So apart from the current promotion that you can be getting if you subscribe using our main service, of course, you can go to the website here. This is the Memorial Day promotion. You can choose whatever plan you want. I mean, gold plan is the lowest with $79, all the way to the diamond plan, which include all the groups, which I showed you here. If you want to trade all the groups, if you are only focused on crypto, then you can look for the cryptocurrency, which is part of the group too. And I'll be dropping the code for you guys. So give me just 1 second. This code will be only valid for the one attending the live session, so you'll only be seeing the view. It won't be shared with the public. And if you are a new member or looking to upgrade from the current membership to take the crypto session, then yeah, you can be using this discount code, apart for, of course, which will be applied to the Memorial Day savings. So that's an extra gift for you to use. That's great. Okay, I'm just reviewing the chat if I missed anything from you guys. I know the session was kind of extended. We'll try to do another one, a better one, specifically for maybe more focused on alts and the targets or short-term trading opportunity. We won't be going over, because this was kind of an introduction session talking about Elliott Wave theory, about the targets in Bitcoin and everything, but we'll be doing something in this nature in the future, maybe next month. We'll be focusing more on alts for this alt season. So don't forget to subscribe to our YouTube channel for future video. If you found today's insight really valuable, then like and share with the webinar with your friends. Remember to follow us in X at Elliott Forecast for more markets updates. You can also follow me in on X as well at Elliott Wave for altcoin insights, because we don't cover. I mean, the main coins that we cover are, as I mentioned, Bitcoin, ETH, XRP, DOG, and Solana with BNB. So these are the main instruments that we watch. But if you want to have altcoins forecast, or you can ask for different coins, you can join the group. You can go to the live session. We have a live session, live trading room. You can ask extra question. If the analysts there have enough time, you can always give you a forecast. Also, you can also always ask me on the ask us on the X, and you can tweet whatever you like, and we can answer whenever we can. Any final question? I always post different. I'm following a lot of coins. I mean, I'm basically analyzing the crypto market. So yeah, I post a lot of about cryptocurrency. You can find different altcoin analysis there with main short-term setups. But yes, we'll be doing this type of webinar maybe in the near future, maybe next month. I don't know exactly, but we'll keep you updated for sure. Okay, so thanks again for tuning in. Thanks everyone for watching. Have a great weekend, and see you on the next video. Take care.